There are student loan borrowers who receive a discharge of their federal student loans under the Total and Permanent Disability Discharge Program. What that means is that these borrowers have been medically determined, that they have a physical or mental or a combination of the two impairment that does not allow them to engage in substantial gainful activity. And to receive this determination is usually done one of three ways: either through the VA, meaning there is a service connected disability; through the Social Security Administration, meaning that this borrower receives SSI or SSDI benefits; through a medical professional certification. And on the student aid website, they give you a list of all of those professionals that can certify the information. But when you get to the student aid website, when it comes to the tax portion, because when a person is deemed to be total and permanently disabled, or the borrower passes away, there are still taxes on the federal side on that discharged amount. Well, the student aid website has not been updated to reflect that that is no longer the case. The One Big Beautiful Bill Act passed on the 4th of July, 2025, and in that there was a clause that spoke about them excluding the discharge portion of student loans under total and permanent disability from being taxable. So, meaning that they will not issue a 1099-C for that discharge portion. And in order to look at that information, you can just go to the One Big Beautiful Bill Act, and I'll show you the section so that way you can go and take a look at it and read it for yourself. So, if you're someone that has your loans discharged under total and permanent disability, you are no longer subjected on the federal side. States may be different depending on what state that you're in, but on the federal side, you are no longer subjected to taxes payable or 1099-C being issued on that discharged amount.